We're seeing consolidation in the Forex market ahead of the G20 summit. The G20 summit begins on Friday and carries over to the weekend. And the big question is deal or no deal for the US and China. Because the question marks are so big and because the uncertainty is so high, investors have been very reluctant to take on major positions. Now, dollar yen has rebounded from its 6-month lows. This is very much the currency to watch, because it's the one that's most sensitive to the trade relations between the US and China. The rally in dollar yen tells us that investors are optimistic. We also see similar rallies in US equities, and they're hoping that there will be a renewal of trade talks between the US and China, maybe even a trade agreement, which I think would be a bit far-fetched, but still on the table as a possibility. Now, in terms of a Friday trade, not only do we have the G20 summit, but we also have month and quarter end flows that could affect the currency market. In the second quarter, we had a very strong rally in U.S. stocks. U.S. equities hit record highs. So for rebalancing purposes, investors and portfolio managers will need to unwind U.S. dollars or sell U.S. dollars in order to get their portfolios back to balance. So we can see some of that pressure the U.S. dollar Japanese yen pair lower. And then the big meeting that everyone is waiting for between President Xi and President Trump will be on Saturday. Because it's unclear whether or not we'll see material progress, because it still seems like the Trump administration is happy with where the tariffs are and could continue to impose additional tariffs if they don't get to the terms that they want met, that there could be profit taking in dollar yen ahead of the G20 summit. Even if you are optimistic, I think the wise thing for a lot of traders to do is to reduce their exposure, because anything goes. So as a result, Friday we could see profit taking in dollar yen. Now, if we look at the longer term scale, if we look past these trade talks, as long as we get just a restart of the negotiations and not a full-fledged trade deal, which I think is highly unlikely, the big story and the big theme for the U.S. dollar is slower U.S. growth, a Fed that is probably looking to cut interest rates in the second half of the year. So all of that has kicked off a broad-based decline in the U.S. dollar. So I think that even if we have a bounce off of any trade talk optimism or trade talk progress, that is going to be short-lived and it probably won't last. So that's the outlook for G20 and what to expect over the weekend.